otherwise he'll be eaten to death. And in the same jungle, when the sun comes up every morning and a lion wakes up, it knows it has to run, and it has to run faster than the slowest of the gazelles, otherwise it will starve to death. So it doesn't matter whether you are a lion or a gazelle. In the jungle, when the sun comes up, you should better be running. And today's jungle is the technological innovation that's happening. In today's world, the change is happening so rapidly that if you are part of it, you have to adapt to it. And if you don't adapt to the change, it's likely that you will perish, and you will perish in a way that nobody would remember you. And recently, we have seen what has happened to different industries, how they have transformed themselves. This morning, we had some good talk by Mr. Abbas and the Deputy Governor, who talked about the changes that are happening in the financial sector. We had a panel discussion, and we talked about the risks that we as an industry are facing. And we all talked about financial stability and consumer protection, and we talked about AI and how it's going to take away the jobs, and of course, blockchain, how it's going to, in fact, in my view, it's going to remove a lot of industries that are there right now. And this is what disruption is all about. And the human civilization is witnessing this disruption for at least the past 300 years. And the pace of this disruption has actually gathered and accelerated in the past few years. With social media, with mobile ubiquity, with fast internet, with new technologies like AI, and a rapid transformation that is happening there, with blockchain, I can assure you that not only jobs, but certain industries are ready to go away. And it's great time to actually learn from the experts as to what they are doing. Our region, as was said this morning, has 23% of global population, the SAARC region. And but this is also a reality that our SAARC region is one of the poorest regions in the world. And if we don't take advantage of the digitization and the new technologies and take the quantum leap into a future that is good for our children and grandchildren, I don't think we'll have a place. At one time, our own, only a part of our subcontinent used to produce 24%, 25% of global GDP. That's almost 300 years ago. Today, as a country and as a region, our production is not at par with what the developed world is doing. And I think the way to development and way to progress is adoption of technology. So with that, I'll request our honorable panelists, starting with Dr. Hans Genberg, to say a few words. Each panelist will have 5 minutes, and they'll either make a presentation or they say something on the topic, and then we'll move on to the questions. So Dr. Hans, over to you, please. Thank you.
Thank you. Thank you very much. It's a great honor to be present on this panel on an extremely important topic of digitalization and technological improvement, how it affects capacity building in financial industry and central banks in particular, which is what I'm going to speak about. And I will also limit my comments to AI, artificial intelligence particularly. Um, Let me tell you two stories first. One is something I read in this morning, I heard a report from BBC that using AI had managed to solve in 48 hours a problem that had taken researchers several years to accomplish. That was about a problem related to the existence of so-called super bugs that are resistant to antibiotics. The other story, so you can, AI has the capacity to improve our ability to conduct research and find new solutions to old problems. But my second story is a little bit less optimistic. It's a story about a colleague who asked ChatGTP to give some opinion about the effects of Mr. President Trump's tariff policies in the world. And the first answer was a fairly robust defense of those policies, saying they had all sorts of good facets to them. Then the colleagues said, well, but don't you think these policies might also have an effect on productivity, and mentioned a few things. ChatGPT came back and said, oh, you are perfectly right. And the colleague also asked to give some other suggestions what could go wrong with those policies. And ChatGPT then gave a 2-page, strong and robust denial of Trump's policies. So what's the lesson from that? Is that it depends a lot on what you ask the artificial intelligence programs to do. Depending on how you ask, you can get the kind of answers that you want in some areas. And I think central banking, at least in the area of monetary policy, which I would like to say a few words about, the use of artificial intelligence is much more difficult than in the physical sciences, because there are no sort of uniformly accepted answers to certain questions involving social sciences and monetary policy, its effect on the economies. And therefore, you can, by asking questions in a particular way, you might get one answer. You ask a question in a different way, you get another answer. And the point here being that you need to understand how these artificial intelligence programs generate their answers in order to be able to assess whether they are applicable to your particular situation. And I think this is perhaps most evident if you ask the artificial intelligence to make a forecast on the basis of some information that you give it, and looking at data and the economy. The forecast is going to be probably very good in the sense of being perhaps better than alternative forecasts, but is not going to be able to tell you anything about causality. And this is where I think we have to be very careful in our use of artificial intelligence for predictive analysis, because the Swedish former central bank governor, Ingves, once had the view that I cannot close a bank on the basis of some assessment by an artificial intelligence program of the solidity of that bank. I have to have a story. I cannot just say, well, the artificial intelligence program told me so. It doesn't. It will not be accepted in the community. So while I think these new technologies and AI in particular can be extremely useful, but they are only useful if we know how to harness them well. And I think this is where central banks need to be, and the staff need to be very well acquainted with these models. And to use the analogy of the antelope and the lion, the financial sector in the area of banking regulation and so on is introducing new methods to assess loans, to make decisions. The central bank regulator must be able to use these tools at the same speed. Otherwise, they will be overtaken by the speed with which innovations are happening in the financial sector. I think I will end there by saying that AI can be an extremely useful and helpful tool, but it needs to be harnessed by an increased awareness and capability of central bank staff to understand what the answers, how the answers are generated by these methods. Thank you very much.
Thank you, Dr. Heinz. I think that's a really useful perspective. And I think what lesson number one for today's panel is that we need to understand how AI works. And we need to start thinking about asking the right questions in order to get the right answers. So with that, I move on to Dr. Mangal Goswami. Over to you, Dr. Mangal.
Great. Thank you very much for the invitation. It's an honor to be here. And I'll try to share this presentation. If it doesn't work out, I will quickly start, just talking about it. It seems like, let me just quickly check if I can. If not, I will just quickly, can you see it?
It's working. Yeah, I hope it will be there.
Okay. If you can see, I'll just portray one picture if you can see it. Can you see it?
It's coming. Yeah, so we can see it now. If you can put it to full screen, that would be great.
I have done it, but it doesn't work here. Anyway, I shall not waste any time here. Sorry about that. I think it's not working here. Okay. My apologies.
It's okay, Dr. Mangal.
My apologies. So the first picture I have here is of this beautiful place in New Zealand that I visited last year. It's Glenorchy in the south of South Island. And of course, we spotted a black swan there in this beautiful, lake. And of course, being an economist, I can turn this beautiful picture to a grim story, to a grim narrative. And the grim narrative is that clearly in what we are seeing in our economic landscape and the financial and economic landscape is that increasingly these sort of low probability, high impact circumstances or issues are shocks are becoming much more common in our life. And that makes our job as policymakers or be in the business of capacity development to be much more difficult. So as a result, there is, I'm quoting Mohamed El-Arian, is the global economy is facing an unusual spread of plausible outcomes, and policymakers and businesses need to adapt to better structural uncertainty. So I'm sorry that this is not working. I'll stop sharing. If somebody can kill it, that would be great, but I think this is not working here.
We can see the slide on screen.
You can. Okay, so I'll just keep that one slide. And that's basically, and the key message here is that we have to adapt to this structural uncertainty in an increasingly complex world where there are many more tail events. But that said, if you look at our economies, if you look at the emerging markets, the frontier markets and the likes, they have been pretty resilient despite so many shocks. And of course, you can attribute this to the reforms that have been undertaken over the past 5 to 10 years. And part of these reforms being undertaken can be also attributed to building institutional capacity and human capital, which has helped in the implementation of these reforms. So overall, I think capacity development has helped us to be more resilient despite such shocks that have hit us. That said, the bigger story now is that, yes, being resilient is not good enough, because clearly, what we have seen over this decade is that growth has been very low and productivity has also been relatively muted. So overall, the situation going forward is, for us, the onus is to turn this decade of disappointing growth and right now rising debt vulnerabilities to a high growth potential economy. So I'll just quote here from Michael Spence. He says, that if properly used, AI could significantly accelerate economic growth and help productivity growth rebound. So clearly there is AI could possibly turn this decade of growth and debt vulnerabilities into higher productivity and higher potential growth, which is a plausible statement. But at the same time, we really have to understand what goes. It's not just the technology that is going to enable us to do this, but it's the kind of macroeconomic policies that we adopt that's going to be much more important. So in that light, I think I will talk about a few top of mind issues that are being, that are important in our capacity building that we do, and using technology to further embed technology into the studying of these, the learning of this, can further enhance our understanding. One is, of course, top of mind is building macro stability. We have to have macro stability in a very, very evolving world. Therefore, your macro frameworks have to be much more robust. And they're increasingly, using a lot of big data to understand the persistence of inflation, the persistence, the high debt, monetary transmission. This is very much front and center in the capacity building world, where technology is really enabling us to go from very simple spreadsheet based data analysis to much more complex unstructured data, where we can tease out some of the issues here and try to analyze them from that perspective using technology. And similarly, in the area of regulation and supervision, we are using soup tech and reg tech. In stress testing, we are using increasingly more technology. And payment platforms are again, digital platforms are again using technology. So this is all happening, and digitalization of money and financial assets, be it sovereign e-money or be it digital assets like cryptocurrencies, is very much a technology driven sort of issue, where we have to understand how technology is taking us to this next frontier. That said, of course, what we are seeing is that a huge adoption of cloud technology, because cloud is the only answer to being out there analyzing these issues. Of course, for central banks, cloud adoption becomes a very important issue, given that a lot of this cloud adoption takes place through a third party. And there, the risk of hacking, cyber risk management becomes very important. So the other side of being online, being having the cloud adoption, financial, that clearly opens up central banks and other institutions to cyber risk related issues. There are many others. As we go along, we can talk about it. But again, these are some of the issues that technology on one hand is helping us to analyze, but then we are open to these kind of very difficult issues that may come up while we are in the cloud trying to assess some of these issues. So again, very quickly, I'll just close by saying that, I think for central bankers, the use of technology is very, very important. But at the same time, we have to be very much aware of what are the structural shifts that are happening in the global arena. We have to be relevant. Using technology such as digital money, using technology for assessing climate change is going to be very important. We need to understand some of the broader issues of geoeconomic shift. Of course, using big unstructured data is going to be useful there. And of course, application to the real world, practical experiences that we illustrate in our capacity building, through the use of technology will be very important. And this has to largely be demand driven from what our constituencies are asking, which was some of the top of the mind issues that I discussed earlier. Again, we have to also customize our capacity building to the country circumstances. And we have to take a much more interdisciplinary approach. I'll give you an example, like climate related macro financial issues clearly, cross different disciplines, and we have to be aware of these interdisciplinary issues. And of course, technology can sort of, harnessing technology can make that even better. So overall, I guess the use of technology can accelerate the learning and capacity development, and we can talk about more of this as we move along. So I'll stop there. Thank you.
Thank you. Thank you, Dr. Mangalan. I think that's a very valid point, and it connects to what Dr. Hans also said about understanding technology. Because while we know technology is going to solve a lot of problems, I think we also are quite uncertain about the future that we are going to be having with the new technologies that are in front of us. But I'll move on to Dr. Rizwan Malik for his opening remarks. Over to you, Dr. Rizwan.
Thank you very much, Mr. Sajid. It's a pleasure to be here. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good day to all of you. First of all, we'd like to thank State Bank of Pakistan, NIBAF, and SAARC for inviting Bahrain Institute of Banking and Finance to be part of this session. It is certainly, a very pleasant experience for me personally to be part of this, august list of panelists from all across the globe. On a very, very dear topic, and it's very important from as rightly mentioned, from a regulatory perspective to look at the technology, and regulators are usually the last to come to mind when we look at technology, given the reactive nature of the work that they are involved in. So, of course, around us, we've got, the speed of change when it comes to technology is enormous. It's overwhelming, and we have no choice but to adapt to it. And adapting at times is a reactive approach, which we in general in the regulatory space, as well as the standard setting space, we tend to be present. So, of course, the use of AI, machine learning, and big data is reshaping business models. We know that half of the employers globally are planning to reorient their businesses to target new opportunities resulting from these technological advancements. And the most common among the workforce response, or the most common response to the workforce, is the upskill of the people in line with these new opportunities and businesses that are around us. So we have seen, of course, rich companies making use of their data and opening new business opportunities. The telcos of the world comes to mind immediately. But even then, not just the telcos and new business opportunities, but enhancement of existing businesses in terms of pivoting at times enhancing the existing business opportunities have come across quite a lot, and that's where a lot of potential lies. So, of course, the advancement of technology and the impact that it has on all of us requires us to look at not just upskilling, rather unskilling and reskilling. In terms of whatever is coming. You rightly mentioned about we don't know what is forthcoming, but certainly what is forthcoming is unimaginable in what we have seen in the last 3-4 years, and that actually gives rise to the need for agility, something that has been referred to, I'm sure, in the earlier talks. So, in terms of the potential of AI, it's huge and it's enormous. But just to quote, given that a lot of people have shared stories, so just to quote the recent, comment that was made by the CEO of Goldman Sachs, where he said that AI can actually draft 95% of an IPO prospectus in minutes, what it used to take a few weeks for his staff to take. So, of course, keeping it from a financial sector perspective, of course, AI is changing all the business opportunities around us. In terms of banking sector, it is expected 48% of banking leaders, they identify upskilling, reskilling, and cross-skilling employees as a top priority, which is very important for everybody to understand. So, of course, AI and machine learning is not a myth anymore. It is the reality of life, and we have to adapt and get used to it. There are a lot of pleasant news in that, of course, where we can delegate a lot of roles and responsibilities, but at the same time, it also gives rise to some unpleasant, if I can use the word, unpleasant fear that is there on what the potential of this technology is. And I think that's where the role of ethics comes in, and perhaps we can talk about that a bit later on. But in terms of when it comes to the use of technology and the workforce development, we need to move away from subject matter experts. Back in the days, we were looking for, when it comes to investment analysts, we're looking for CFA qualified. When it comes to accounting, we're looking for chartered accountants. Don't get me wrong, but those professions are very important, and the basic understanding would remain. But a lot of the roles or that those professionals are doing perhaps can be taken over by AI and the machine learning from that perspective. So given that the speed of machine is much higher than what a human can achieve, we see a lot of potential in terms of those skills being replaced, and the need for much different skill set comes about. So when it comes to moving away from financial professionals perspective, the need for analytical thinking comes in. So that's where a lot of job profiles are coming together. So when we look at the Future of Jobs Report 2025, which I think was quoted earlier in the day, it was mentioned that 92 million jobs will be replaced, while 170 million new roles would be created. And if you look at the need on what are those roles that are required, then you can easily see that, of course, technological advancement related to AI and big data, networks and cybersecurity. But quickly enough, you will look at the roles of roles like creative thinking, the need for resilience, flexibility, agility. Those roles are coming to foray. We've never thought about those in the past. Of course, creative thinking has been part of it, where innovative thinking have come about, but the need for just having creative thinkers around us, has never been talked about in the past. Yes, we have talked about innovation from that perspective. So the need for better analysis is there. The need for analyzing this huge data set that we have with us, making sure that it is put to the right use, is something that is certainly there. And at the same time, of course, there are challenges when it comes to capacity building. What type of experts are we looking at? How gone are the days, of course, when we are learning used to stop once we are out of college and uni, but rather we are into the unimaginable world where unlearning takes a long time rather than upskilling. So we need to unlearn what we learned in the past, re-equip our staff or colleagues with new skills, and that also using the current norms of the technology, right? People no longer want to hear or sit in a class where they would like to hear the lecturer speak for 3 hours. Rather, they want to reorient themselves and understand from a gamification perspective. So using gamification in understanding how technology can help them, from a case study perspective, from examples perspective, what are the best use cases that have been applied to? I think that is basically where the capacity building needs to take up, and that's where a lot of potential is there when it comes to technology and the capacity building. So technology is certainly there. It's basically how we put to use in that technology is what we believe there's a lot of potential in. So just giving you very, very quickly, even from our current perspective, and very much I can relate to, from Bahrain Institute of Banking and Finance, which is the training arm of Central Bank of Bahrain, we have got a full-fledged technology center in place, which focuses on the new age technological developments, be it from a cybersecurity perspective, be it from the AI, machine learning, and the big data perspective, how that can be applied to the underlying sectors. So we got a number of different professional qualifications or courses that basically bring together the technological advancements clubbed with the financial know-how to ensure that whatever we are serving, whoever the stakeholders are, they understand, and it is very much related to the job profile they're on. So just even the survey that we did at our institutional level is very much like what the jobs report mentioned. Top professions like data scientists, information technology, application of technology. These happen to be the top priority among the employers as we speak. And and the need of creative thinkers, analytical thinking and innovation, complex problem solving. Now we've got all this data. How can we put to use? How can we bring out meaning or a meaningful information out of that data is where we see a lot more development. And that's where I think we play, as an institution, we play a role from our own niche perspective. And I think that's where we can share our examples and share our know-how when it comes to other stakeholders in general. So I'll take a pause here. I'll come back to my turn again, but I'll take a pause here for now.
Yes, thank you, Dr. Rizwan. And I think what's happening here is the key theme that is emerging is that while technology will help us and understanding technology will actually make us better workers, but there is going to be certain reskilling and upskilling, and that is defining of new skills, new roles is going to happen in the new age. With that, I'll move on to Mr. Juan Carlos. Over to you, Juan.
Hello, thank you very much. Can you hear me well?
Yeah, perfect.
Excellent. Thank you. So thank you very much for the invitation. It's a great pleasure to be here and also to share this panels with some distinguished colleagues. So let me just give you a little bit of an introduction for where I come from. So this is the Financial Stability Institute, which is the part of the BIS, whose main role is to provide capacity building and assistance to supervisors and regulators worldwide to implement international regulatory standards and sound supervisory practices. So a key part of our work is capacity building, and we provide this through two main channels. One is FSI Connect, the BIS e-learning tool that was launched in 2004. We just celebrating 20 years of this. Main audience are, I would say, central bankers and other financial authorities. And the key issue here is that this is one of the very few paid services that the BIS provides. And the rationale for that is that we believe that this assigns value to the tool. Second one are online courses. It came about in the last few years as part of a big digitalization of capacity building in the BIS. And the idea of that is to tackle not only key fundamental topics, but also the new topics such as technology, climate, innovation, sustainability. So I will base my comments and reflections on these three channels of capacity building. And I will make three observations in these initial remarks. Number one is institutional support matters a lot to have an effective capacity building framework, including digital training. And I say that because I believe that in many organizations, what we find is a mistake saying that digital training sometimes takes over and tries to manage the way of upskilling, reskilling, of course, skilling, as it was said before. But what we believe that is much more effective is when the senior management identification of key priorities in terms of financial stability, monetary policy, technology, innovation, climate, etc. When there is decision in terms of moving forward with capacity building with that, it's very important that this decision and the approaches taken in order to upskill staff are the ones that should drive the capacity building approaches and also the strategies, including going for digital training. And this is really, really important because we believe that when we have observed effective capacity building programs is when there is institutional buy-in, when there is a sign of value to capacity building in the organization. And this is very important because we depend throughout the organization of line managers and senior executives supporting capacity building. So that's the first part. The second one is that because capacity building is not something that has to be decided, can be decided in the short term, in its planning, in its resources, you need senior leadership commitment for that. And for me, the key test to understand whether there is commitment in terms of capacity building is when I look at the unit, the function, the department on capacity building and whether it has the resources, the expertise, and the support necessary in order to implement a capacity building program. So first topic, institutional support. Second one, we believe that for digital training to be effective, it needs to be part of a structured capacity building program. What do I mean by that? So what we observe is that a number of financial authorities structure capacity building typically around levels of expertise, meaning foundation, intermediate, and advanced. For digital training to be important there, we believe that there are some conditions. Number one has to do about having learning paths that facilitate the journey of learning and upskilling. Second one, we believe that it has to be designed taking into account the staff profiles, but also the staff roles. So that is really important because the risk is leaving people behind. For instance, older or more experienced generation. And the third key element for us is that it has to be an incentive scheme in place because we need to find ways to acknowledge, to recognize completion, progress, and this is really important. That is a key criteria in order to have, in our opinion, successful digital training programs. The other point that I would like to remark in this fora is that we believe that digital training is not the silver bullet in order to deal with capacity building. There are a number of positive things about digital training. One is about cost benefits, the discussions we're having, the possibility of having top experts, worldwide recognized experts in our desks, and the ability to bring the latest knowledge in our screens. But at the same time, there are some limitations, and then they have to do with sometimes the distractions. We observe that there is obviously the risk of being postponed because things take over, lack of engagement that we find, lack of interactivity. So we believe that it's really important to combine digital training with other type of training, for instance, in-person training. And in-person training we find very effective when we're talking about sharing practices and experiences, also in terms of getting to know much more difficult and politically sensitive topics, or in-person training is really, really important in getting to know your colleagues. The network part, we shouldn't be underestimated in the context of capacity building as a very powerful byproduct. And when we see the technological topic, we're talking about AI and before, but when we see the capacity building frameworks related to technological topics, we see also the need to have hands-on experience, the need to use sandboxes, innovation labs, in order to have a very practical experience with the new use of technology in the context of the banking sector. And finally, in this sort of broad pocket of having capacity building and digital training being as part of a structured product, is that the capacity building program has to be open to embrace third parties. Collaborations and partnerships are critically important, and it comes from the fact that we're discussing technology in this panel. We're discussing, and if you think you can discuss of climate, a number of new topics, sustainability. The financial authorities are not able and have the capacity to produce new topics, and therefore we need to embrace academics, universities, third-party providers, and even consultancy firms that are able to bring all this knowledge, an updated version of this knowledge, included in our capacity building programs. The final observation I will make in this initial remarks have to do that for us, digital training works best when there is a process in place for monitoring and assessing the impact, and based on that, taking decisions of upgrading or updating the content. So that means that assessing effectiveness, and we can discuss much more about, is about getting feedback from the learners, getting feedback from bosses, other stakeholders. But then comes that it's important to have a capacity building function whose role is to assess this feedback, to assess the impact, and find ways or help to find ways to upgrade the learning approaches, update the content, because it's so important, particularly when you talk about digital training, that it doesn't become obsolete and ineffective. So let me stop there with these initial remarks. I'm happy to elaborate on any of them.
Thank you, Juan. And I think you made some very valid points here. Yes, institutional support, indeed, it's important. And it's very important that how we structure our training programs, how stakeholders are engaged, how feedback mechanisms are put in place. So, and of course, with new tools, digital learning may not be the only silver bullet, like you rightly said, with new bullets like in-person training, sandboxes, innovation labs. So there is a lot that needs to be done. And thank you for all our four participants, panelists, for sharing their views with us. So with this, I move to round two, which is individual question and answers. And I'll move to start with Dr. Hans Genberg. Dr. Genberg, why do you think the role of new technologies in capacity building is important, especially for financial institutions and their regulators? And in the same breath, I would like to ask how leading regulatory authorities and financial institutions today are integrating technology into their learning and development programs, especially central banks in functional areas like licensing, prudential regulations, bank supervision, payment systems oversight, monetary policy, and other functions. So what have you seen and what are the global trends in this area? So over to you, Dr. Hans. You are on mute, Doctor.
Yes. Uh,
Yeah,
Thank
that's
you.
fine.
Sorry about that. Those are very, very pertinent questions. And on the first one about why technologies are important in the central banking, it's a little bit what I said before, namely that in the private sector, technologies are being used increasingly be it in commercial banking in terms of credit scoring, for example, and also in terms of using big data to analyze trends in the economy. So it is used in the private sector, and therefore central banks need to be aware and able to assess what is happening in the private sector in order to provide their role as a regulator and supervisor of the financial system. I think also digitalization of social media, or the increasing use of social media, means that there's a lot of information that potentially can be used by central banks in assessing their role as in terms of monetary policy, in terms of communication. For example, in this Master in Central Banking program that we have at the Asia School of Business, we asked the students to write a master's thesis. One of the students from the Philippines, she decided that she was going to use social media information to assess the extent to which complaints about the central bank in any area is leading to a loss of confidence in the central bank as an institution. So she scraped the internet for all sorts of commentaries in the Philippines, in particular. That's where she comes from. She works for the BSP, and managed to use the new technologies to analyze these data that she gathered. This is just one example where the central bank can use unstructured data and that comes from the internet in this particular case. I would also like to just mention again that in the area of collecting information from the internet, the central banks can and are using all sorts of unconventional data to assess in real time the development of economy, so-called nowcasting. Can use electricity use, and I'm sure you've all seen maps of the world where the light is on more intensely in some areas than others, and when COVID hit, light intensity was less used, and you can tweak this sort of information to get some idea about how economic activity is evolving, and that central banks can use that in their monitoring, and therefore potentially in their decisions on monetary policy. So I think there are almost an infinite number of new possibilities to gather information about the role of the central bank, or the perception of the central bank in an economy, and hence its credibility and ability to steer the economy going forward, and also to assess new forms of data for monetary policy decisions. Again, though, I think it's very important to emphasize that what we get from these kinds of exercises is essentially correlations. We don't get a story about causation. And I think that is where an understanding of the underlying, having some underlying model of human behavior and behavior of economies is necessary. Maybe new models or new programs in artificial intelligence will be able to predict in a causal way what is going to happen if the central bank changes its policies. But personally, I think that is far away in time, because social sciences is a lot about interactions, about individuals, and individual interactions will change over time. They depend on psychology that evolves over time, and I'm not convinced that artificial intelligence is able yet to decipher new trends and new causal mechanisms in an economy. So I think there's a role for human analysis, and that's what, of course, I find as a professor, I find that fairly comforting, because otherwise we'd be out of business, I'm afraid.
Thank you. Thank you, Dr. Hansen. I hope it goes like you think, and we hope that humans will remain a critical part of this whole equation. And you rightly said that we have so many non-conventional ways of integrating technology into our decision making. And I think what we can do is to devise training programs that would allow our people to learn as to how they can use these new technologies. So for example, we have our own instant payment systems here, and what we are learning here in Pakistan is that we can actually get access to a lot of non-conventional data from that instant payment system, and we can actually use that data to learn a lot about what's happening in the economy. So very rightly said. So I'll now move to Dr. Rizwan Malik. So Dr. Malik, how has BIBF leveraged AI, machine learning, and data analytics to identify and address skill gaps in the financial sector? And how do you see these technologies shaping the future of learning in the industry, especially in our region? So that's question one. And I have another one for you, and you can just reply to both of them together. How can international collaboration and partnerships between financial training institutes, regulators, and globally recognized certification bodies enhance the adoption of technology-driven learning in the financial sector? And can you share any successful model or initiatives that BIBF has been involved in? So apologies, but two questions together for you.
Thank you. I hope I can do justice to them. So thank you very much. I think when it comes to the first question in terms of using technology, in the capacity building. Of course, this is something, as has been mentioned, it has been overwhelming in terms of what AI and machine learning can do. And if it has pivoted the businesses and the potential opportunities, there's a lot that is forthcoming. As I mentioned earlier as well, there is pleasantly, surprising news in terms of in a good way, and there is, of course, unpleasantly fearful potential future that we are heading towards. So both needs to remain in check. And that's where the role of ethics is very, very important. I don't think, hardcore, data professionals in general would go through any ethics-related courses from that perspective. Ethics have always been left to, either more importantly now, of course, lately we have, after the financial crisis, a lot of focus has come about within the financial sector as well. But it is even more important when it comes to other professionals, and more importantly, for the professionals who are using data and to run businesses and pivot businesses from that perspective. So you asked about BIBF and what we are doing from our technological development perspective. See, we've got a full-fledged center here. We call it Digital Transformation and Project Management. That center focuses on different aspects of technological advancements, starting from cybersecurity to advanced machine learning, AI, all of that goes in that. And of course, it looks at what is forthcoming as we speak. So what we do is we offer various professional as well as our own qualifications that cater to these new age technological advancements. I think that's very important for us to mention as number one. Then what we do more importantly is it's not just any courses or any trainings that we would offer. The trainings that we offer are very much targeted to the professionals that are attending the programs. So for example, if we are delivering some trainings for a bank or a financial institution, then the training, the two centers would come together. So the technological advancement or the technological know-how would come in from our digital transformation center, and the financial know-how will come from our banking and finance center. So the centers come together and they put together a unique program which caters for the professionals that we are serving as we speak. So that is a unique perspective that BIBF has, given that it has two advanced level experiences from our two centers that we have. So that's where I think I think some of the other colleagues mentioned as well, it's not about just offering a solution from one side, rather it is about offering a dynamic solution that serves both from a technological perspective and also serve the uniqueness of the individual and the professional at hand. So I think that is the need for specialized training serving the individual, be it be from a supervision perspective, be it be from an individual bank's perspective. And that's where I think we have seen a lot of enhancement as well. So when we look at the profession of audit, for example, we see a lot of audit related professions put to use when it comes to technology. In our courses, what we have offered is to offer how can we use technology to automate or make it more dynamic, the profession of audit from that perspective. So I think that's where a lot of data comes about. So I think that's where the uniqueness of BIBF comes in. And given that we interact with the local stakeholders quite a lot, and the talk, what we have come across is the feedback that we have received from our stakeholders is, the need, and I'll repeat, the need for lifelong learning, the need for agility. The Generation Z that we are part of, they're very, digital natives, of course, and they're looking to use whatever is in fashion to learn fast and develop based on that. So I think that's where the uniqueness of BIBF comes about. We remain very relevant in terms of what I mean by that is that we remain in touch with the financial sector that we have, be it the HR professionals or the subject matter experts, to understand what is the gap in the market. Our stakeholders, what is that they're trying to solve? And if we can provide and develop a solution from that, from a capacity building perspective, and that's where they, that's where the interest enhances. So the understanding of the gap from the individual client perspective is very important, be it a central bank, be it individual banks. And we have seen lately a lot of banks, of course, using up the digital space. How can we use the open AI and all of that to develop the existing solutions? So I think that's where the role of continuous engagement with the stakeholders and partnership and collaboration with the local stakeholders as well as external stakeholders come about. So BIBF in general offers, of course, the local level qualification, but it also ties up with the professional awarding bodies to ensure that whatever the solution that it provides are benchmarked to the highest level. So that's where the uniqueness comes in, and we can share our experiences from that perspective. Now, you talked about the collaboration that we have formed with other institutions, regulators, and other service providers from that perspective. So I think what we generally do is we of course firmly believe that partnerships and collaborations, as our colleague mentioned, are very, very important. It's not about no longer that we can actually learn from somebody else. It's about shouldering up and using somebody else's strength to leverage on your unique selling point and kind of move forward. And this is true when we talk about our collaboration with our local stakeholders as well as our international stakeholders. So tailored digital programs is something that we have developed that are very, very very carefully drafted to cater the target audience. And I think that's where the uniqueness of BIBF comes in. So one of the programs that we have developed is around developing digital ambassadors. So it ranges from from a junior staff leading on to the mid-level, mid-management, and to the senior management. So we've crafted a 3 to 4 level programs where we focus on the junior staff to ensure that they understand the digital tools and technologies, and through how can we empower them to ensure that technological tools can be developed and can be used for their own work and make a meaningful contribution to the work that they do. Then the second part of the program, what we call is digital transformers. We look at the mid-management and business professionals. The program tracks people who would lead the digital transformation initiatives within their organizations. And then the curriculum will look at the strategic insights and practical skills that are essential for managing change and implementing digital solutions effectively. Then you will look at the experts. So that's where your subject matter experts come about. How can we cater for the technical teams when it comes to AI, data analytics, cybersecurity, cloud computing? We provide them deep dive into these areas to ensure that they're equipped with the right resources. And then more importantly, the tone at the highest level is very important. How are the CEOs? Are they believers in this change, or they are rigid in terms of no, our businesses will not be affected. All of us knows that the tone at the highest level is very important. We've got multiple examples when the management at the highest level did not take account of the technological advancement. You can talk about Kodak, you can talk about Nokia, you can talk about BlackBerry. These are all businesses that were a talk of the town a few decades ago, or at least a decade ago, and now they are a history. So I think that's where we provide a sensitization program for the leaders to ensure that when we speak to them, we make them understand that what we are on their side, and we're trying to help them navigate these market dynamics in a way that serve their businesses better. So we bring about uniqueness. We organize awareness and advocacy programs. Just to give you an example, just yesterday, in fact, BIBF organized a very interesting session on AI, generative AI versus the DeepSeek. A very interesting talk. Of course, it's the talk of the town as well. How did we go about, and how did we go about, or how did DeepSeek go about developing something at 1/5 of the cost of what in generative AI had to do? So there's a lot of collaboration around global partnerships in terms of certification programs that are globally recognized. And of course, that are very important when it comes to upskilling upskilling our human resource and making sure they are globally competitive. And I think what I leave you with lastly is we cannot undervalue the mode of training from that perspective. Somebody referred to in-house training, or we call it physical trainings, but the practical learning experiences cannot be undervalued. We see that the Generation Z believes in seeing something before they implement, rather than believing in something in the air. So I think that's very important. The mode of delivery is very important. Practical learning experiences are very important. When we talk about case study based technological learning, they're very important. The stories of the Kodaks, BlackBerry of the world are very important and need continuous reminder for people. So agility at the right time, agility at the management level, and collaboration with the right stakeholders, be it industry benchmarked organization at the local level or at the international level, is very important. And I think that's where BIBF uniqueness comes about in terms of serving both the central banks or regulatory bodies, as well as the banks and financial institutions from that perspective. So I'll pause there. I hope I did some justice to your two questions, and I don't know if I'm over time.
No, thank you so much. And I think thank you for giving your perspective on the trainings offered by BIBF. And you very rightly said leadership does matter, stakeholder engagement and partnerships. They do have a very important role. Now I'll move to Dr. Mangal Goswami. And since you have 3 questions, Dr. Mangal, would you like me to ask each question individually or 3 questions together?
All together is great.
Okay, great. So my first question is, do you think that tech-driven capacity building programs play an important role in today's fast-moving economy? And how can financial institutions proactively prepare for this evolving skills and competency requirements? So that is question 1. What role can financial regulators and policymakers play in supporting the integration of technology-driven learning initiatives in the banking and finance sector? And this morning we had a comment where somebody was complaining that probably the regulator is not doing enough to integrate technology-driven platforms into our programs. And the third is, what key challenges are faced when implementing tech-driven learning, and how these challenges may be overcome? So it's related to tech-driven learning. So over to you, Dr. Mangal.
Thank you very much. Again, I'll just try to be very brief and give you some examples, walk you through some examples, because again, from the IMF's perspective, when we are doing capacity building, it's basically complementing our surveillance and lending. So let's say IMF were to go to country A and say that, look, one of the policy advice we give you is that your debt is unsustainable. Especially under current circumstances, debt is an important vulnerability to be noted. So that is followed up with some capacity building to build the institution's capacity through what we call technical assistance, or maybe individual capacity through training. So in this context, in the context of debt, the IMF has certain online courses and tools. We call it a specific tool would be DDT, which is the debt dynamics tool. The debt dynamics tool is a very, very important tool to assess your debt sustainability, and also to project your financing path and your fiscal adjustment path, so that you can bring your debt back to a sustainable level. So this is all well and good, But now using technology is really, really very powerful. So what I'll give you this example within the context of the DDTX. What the fund is doing is that we have something we have embedded in our training program for DDTX is what we call the AI tutor. It's called the Kiran. Kiran is an AI tutor that is used within the context of this course. And the AI tutor, the way it has been done is that you take your overall AI application, and within the IMF, you teach the large language model in a way that it sort of encompasses sort of a subset of the whole world of macroeconomics and financial stability and debt. So the large language model is sort of taught, a whole is fed with a huge amount of data, text, and so on and so forth, policy analysis. So the world of the Kiran under the debt dynamics becomes a subset of this. Therefore, when you're using this tool within the context of DDTX, you're actually able to ask the AI tutor very specific questions with regards to debt dynamics. And that becomes very powerful in assessing your debt sustainability, because let's say you were just sitting there, your regular training is in person, but at the same time, the in-person training can latch on to this Kiran, which is an AI tutor, AI driven, to give you more specific answers on certain issues, and it can do it with a pace that the human cannot. So it's a very, very powerful tool of combining AI with capacity building. And indeed, there are many other sort of similar AI tutors that are being embedded into training courses to enable technology to capture this kind of these kind of scale, very, very efficiency gains in training. So that's, and I'll give you and related to this, I recently organized what we call a resident advisors. These are the advisors who are all around the globe in the global network of IMF centers. And we had about 17 of these centers people come to Washington, DC. And we had our deputy managing director who has been newly appointed. He used to be the finance minister of Jamaica. So he actually sort of gave a fantastic example of how this debt dynamics tool was used in the parliament to sort of brandish this and say that, look, Jamaica's debt sustainability is off the charts. Let's use this tool, to see what are the adjustment paths of our fiscal policy. So he actually narrated a story where this kind of capacity building was actually used to actually reform and to implement policy to get the debt dynamics back on track for Jamaica. And in fact, Jamaica did very well, not just because of this, but with the multiplicity of adoption, of multiplicity of reform policies, they did. So it's a nice example coming from somebody who was on the other side as a finance minister, being a recipient of this training and actually using this training to actually implement a certain policy. And that too, this training involved AI, which was, which is sort of a fantastic example of this. So I think clearly capacity building in every area, be it financial supervision. I'm sure Juan Carlos have many other examples that the FSI is using to sort of turbocharge your capacity building efforts to help you to understand. I'll give you another example. Like the IMF has this thing called the financial SBP, which is sort of the bread and butter of macro analysis, right, and macro forecasting. It's sort of a very, very integrated 4-sector model, which can either be done through very simple Excel spreadsheets to very, very sophisticated models. And AI technology, including nowcasting features that are driven by big data, high frequency data, can help this kind of analysis, right? But I'll just here talk about the challenges. But at the same time, when you use too much of these models and too much of the technology and you get an output, it can often be sort of, not as coherent as a policy that you may want to sort of dictate. So in that sense, I think the challenge is for a human to come in with the judgment. The narrative that we talk about of the economics behind the FBP is very important. So the big challenge is to combine this sort of technology-driven output with human understanding of what is going on in the economy. And to combine that with this kind of an output, you can really sort of, have greater traction in terms of what kind of policy advice or what kind of capacity building follow-up that you may have. So this is, again, a adoption of technology, but at the same time use and challenge that we face increasingly as more and more of these models, these kind of data analytics, decision making is driven by technology. We need to be aware of how far to push the boundary where human, we trained economists who go to these countries who understand some of the dynamics have to also be, very, very important part and parcel of this package. So that's a big challenge that we are sort of facing right now, that we need to, be very aware of, because you to understand what AI is doing, at the same time you have to understand what the economies are, your own understand. So this is sort of, what I wanted to say here. I think clearly digital platforms are the way to go. We have different ways of looking at, of training. We have online, we have blended, we have hybrid. So, all of this training, that is technology driven, can be brought to great use for our clients. But at the same time, we have to be aware of some of the challenges that it poses. Clearly, the other challenge, as I talked about earlier, is that you have to collaborate ultimately with the private sector, because that's where the innovation is in technology. So there, the big issue is that once you go, much more into the cloud, and collaboration is opened up, then there have to be certain firewalls that have to be built, so that institutions like the IMF, where confidentiality of your data and so on and so forth sometimes is very important for policy making. So there is that challenge that is also there. The hacking, you can get millions of phishing emails and so on and so forth every day, because you're so connected to the outside world that it's much easier to fall into that crack easily. So you have to be very, very cyber vigilant to ensure that policy institutions, including central banks, are on the top of their game. Because even, for example, I'll give you CBDC. An adoption of CBDC can be hugely detrimental if it opens up to some kind of a cyber risk, and people take advantage of this kind of. So with that, I'll stop here, and hopefully this is useful for our learning. Thank you.
Thank you, Dr. Goswami. It seems like with DDTX you have solved that one problem that Dr. Hans mentioned about asking the right question. And it seems you are asking at least now for now, the right questions. But I think I'll just briefly make 2 points here for the audience here. I think for capacity building, two things need to be included in our programs. One is how to ask the right question when you are using a model like an LLM model like ChatGPT. How to ask the right question. People need to learn that. And then, even more importantly, how to analyze the answer and determine whether it is the right answer or not. That oversight capacity has to be acquired, and it's very important. So finally, Mr. Juan Carlos, I have a very interesting question for you. So we have been talking about the role of leadership even in today's morning session, and particularly in this panel. And you also mentioned that leadership support is crucial for effective implementation of a capacity building strategy across a financial institution or an authority. Uh, would you elaborate about the role that leadership plays in supporting the adoption of technology driven learning in financial authorities? How can leaders effectively support this change? So how is this really going to happen? And secondly, I would like to ask you, how can financial authorities, particularly, assess whether technology-driven learning is effectively closing skills gap and enhancing workforce competency? And what challenges do they face in measuring its impact? So the second question is about measuring the impact of such training programs. So over to you, Juan.
Thank you very much for both questions. Indeed, I made the point earlier today that without senior leadership commitment, it's very challenging to implement a effective capacity development program, including implementing effective digital training for a number of reasons. Number one, we were discussing before about technological platform, and you think about the scale of investments that they demand and the scale of financial human resources, not only in setting up the initial AI or other platforms, but also in keep maintaining them. So you need the leadership commitment in order to provide short, medium, and long-term investments for that. The second reason is that I believe that the nature of technological-driven training requires enhanced institutional support. And let me elaborate with that. So we're discussing before that senior leadership buy-in is important to drive capacity development in our organization, and particularly capacity development culture that values and supports that. Why? Because the main enemy of capacity development in an organization is staff being too busy and therefore appearing other priorities or urgencies and therefore postponing or delaying capacity building organization. And this risk of postponing and delaying is higher in digital training because of the perception that we can always catch up. And therefore, we need senior leadership committed to capacity development because we need line managers giving or providing enough time to their staff in order for them to undertake capacity development as part of the job responsibilities. The third reason why I think senior leadership is important is because capacity development or capacity building in general, but digital training in particular requires a clear incentive scheme. So the need of incentive schemes in digital training seems to be, for me and for our experience, more acute because of this risk of delaying or risk of postponing that we were talking before. So here, not only talking about rewarding staff for completing or progressing in their digital training programs, but also to line managers for allowing or for providing time for their staff to be used on capacity development. But what do I mean by incentives? I think part of the story, and only part, is about bonuses and is about career promotions. It could be part. But I'm also talking about And we've seen successful examples around the world whereby a letter by the top official in an organization publicly acknowledging that this person has fulfilled its capacity development program has enormous impact in terms of visibility for these people in the organization. We always also see an example in which support for specializations or for additional studies also are located, associated with capacity development programs. So when we talk about incentive schemes, clearly we need the support of senior leadership. The fourth reason why we believe that digital training requires a strong commitment from senior leadership is because it requires, to be successful, in our experience, a strong capacity development function. So in my initial words, I emphasized the importance of having a capacity development function within the organization that oversees, manages, and monitors capacity development. And in our experience, this function requires to identify, or it is very important that this function identifies what is the relevant digital courses and material, what Rizwan was talking before. I mean, to collect information, to understand what is happening in academia, in the private sector, in the public sector, but also to monitor learning progress in staff, assess their feedback, coordinate closely with business areas. This is a really important part, that the function of capacity building understands what is needed by the business areas that actually have to implement the day-to-day activities. And based on all of this experience, help to update and upgrade the training. So for that, you need a capacity building function that has the necessary resources, the necessary expertise, and therefore, for that, senior management commitment is very, very important. So moving to your second question about assessing effectiveness of the technology-driven learning programs, this is challenging. And this is challenging because on the one hand, there is no universally accepted metrics to assess the skills gained through technology-driven learning. The traditional assessments, and basically we're talking about quizzes or exams after the learning, tend not to necessarily reflect the improvement in real work scenarios. And this is particularly acute in training, in digital training, because of the risk we were discussing before, these risks about distractions or risk of postponement, or that, when we observe a lot is that people register in these online courses and tend to drop out because other responsibilities or other priorities appear. And more recently, what has made difficult to assess progress and impact is our privacy regulations. So in a number of European countries, because of GDPR, the implementation is such that we are not able to provide information on staff progress because this forms part of their privacy rights. So with that, I want to be a bit more positive. What we see in our experience is that when you talk about foundational training used through digital platforms or digital tools, it works particularly well because there we can assess in much clearer way the progress in the acquiring of skills and capacity, and we can use the traditional tools of assessments or quizzes. So in fundamental training, it works very well. In terms of more advanced knowledge acquired through digital training, what our experience has been that this requires more active and interactive way of teaching. So to engage the audience, more practical tools, as Rizwan was talking before, we see that case studies, simulations work much better, but this demands a much more interaction between the course director, the speakers, the learners, and so on. So, but bear in mind, this is much more costly. So the cost effectiveness element of just having digital platforms is reduced because you insert much more interactivity and engagement into the whole learning process. So in our experience, when we talk about more advanced learning programs, it needs to be a combination of quantitative and qualitative tools. So when we talk about quantitative tools first, we're talking very much about where Max and says, okay, pre and post learning assessment to assess the skills acquisition rate. We also track learning engagement, and then we have statistics about course completion rate, or we take also the time it has taken someone to acquire a particular skill. Qualitative measures are very interesting here because this is much more about conducting interviews, conducting interaction with not only the learners, but also their bosses and other stakeholders to see how much the trained staff has progressed and meeting the competency expectations that are required for doing a particular job. I mean, in fact, talking about particular job, on the job assessments to see the contribution of the trained staff to the deliverables of the particular unit in which it works. This is another key element of this assessment on the qualitative side. So to conclude, just let me say that this all requires, and particularly to assess the impact, it requires a close coordination between this capacity building function that I was talking about with the business areas to make sure that we are all integrated, coordinated, and able to assess the usefulness of these training programs. Let me stop here, please.
Thank you, Juan. That's very useful. Now I have a few more questions, but I'll stop here, and I suggest that we take a few questions from the audience. So if anyone would like to ask any question from our esteemed panelists, please raise your hand. Here, can we have? Please state your name and be very brief with your question. Thank you.
My name is Imam Abu Said. I am from Bangladesh Bank. I am SAARC Finance Coordinator. And thank you very much, panelists, because you are raising very much a prominent issue of the central bank, like Goswami raised the four sector models, and it's the integrated model, and we are now expediting through Excel. So for the technical innovation, we are also going forward AI or other issues. And also Professor Hans talked about the causality. So really we are suffering from the causality issue, which is very much prominent than correlation. So with this kind of n number of variables, we need to concentrate with one thing, that is the payment settlement thing. So payment solve the issues of money demand, that is currency demand. So it's an interbank call money. So if we can fix the money demand, so it will address the Taylor rule issues or other many issues. So how we can expedite the payment issues in the SAARC region to address the liquidity and the call money rate and address the all other equations. So thank you very much.
So Mr. Mangal, I would throw that question to you. You are on mute.
Apologies. There were actually quite a lot of questions weaved into this, but I'll attempt. And again, these are my views and not that of the IMF's. So again, I think if you take a look at how the payment system has evolved in many of the relatively more developed economies, notably in Asia, because that's where I think retail payments, let's say, not the wholesale payment side, has really progressed in a very significant way. So there, I think the fast payment systems have really, on the retail side, have really revolutionized, the entire payment landscape, which makes it much easier for policymakers to sort of not to have to delve into such as CBDC. In certain countries, the whole sort of adoption of CBDC has been somewhat postponed, if I may, because the fast retail payment systems have been working really well. And many countries have used the public infrastructure to further enable this kind of payment system where the private sector can actually, plug into this, and any innovation that the private sector makes can be sort of on this platform, which is the public platform. So in that sense, I think, on the retail payment side, the fast payments have really enhanced the whole sort of payment landscape in a way that has been working relatively efficiently. But on the sort of the more broader issue is the cross-border payment, and that's where I think more advancements are yet to take place, and that's sort of the G20 initiative that is going on. But I would say that you may want to look at some of these other economies that have been able to install or have the fast payment systems take hold, and what kind of reforms they have made, both in the private sector and the public sector, to enable such fast payment systems, which is an important part of the overall payments landscape that enables money to move fast and liquidity to be churning in the system. So I would just keep it at this, because again, I'm not a payment systems expert, but I think it's important to note that the workings of the financial system, again, ultimately is backed by the trust of the central bank. So the credibility and the trust that is put on sovereign money ultimately to settle any payments is, again, primal in any payment system. So that has to be maintained to be able to at least have some basis for these kind of payment systems to function efficiently and credibly. Thank you.
So thank you, Dr. Goswami, and I'll add to that, because fast payment technology is rapidly changing the overall economic landscape. And with ISO 20022 standard, with its rich context-based attached to the payments, it's giving more and more reasons to people to actually move to the new payment systems. And we've seen that in Pakistan also happening with our faster payment systems that's built on ISO 20022, and the adoption rate is quite significant. As for cross-border, my view is that the stablecoins technology is going to be playing a very important role because it allows funds to be transferred in real time with very low cost. So this is something that I think our staff of, especially of central banks broadly, and financial institutions, need to develop their capacity on how the blockchain-based stable coins are being used for transferring money cross-border. So that I think would answer your question. So yes, sorry, I can't see, my screen is gone. So yes, Hans, over to you, please.
Yes, thank you. I had a couple of reactions to the question posed by from the audience, which was relationship between payments technology and the demand for money, and the particular aspect which I just want to mention is the demand for currency, in the sense of distribution of currency notes across the country. One of our students, also in her master in central banking, she is working to use payments, the detailed data on payments from the payment system, to figure out what is the need for distribution of physical currency across the Philippine Islands, which is a big issue in the Philippines because transportation costs are large, and so on. And again, it's an example of the use of big data, in this case from the payment system, to answer a particular question that is of importance for the central bank. And if I may just add, as long as I have the microphone, a little twist to the arguments and the presentation by Juan Carlos and others about the importance of leadership support for AI. I think it also goes a little bit the other way around, namely that the younger generation, they are often more better versed in the use of AI and new technologies than the leaders. And so my little twist is to say the leaders must also not stand in the way for the adoption of new technologies that come organically within an organization. That's a little aspect of that I think is important. Thank you.
Thank you. I think that's an extremely valid point, and that's why I think, Dr. Hans, the role of leadership. That's one aspect of leadership as well. I'll ask, if there are no other questions, I'll ask one more question, and for me, it's very, very important. And it's anybody from the panel can answer. How can financial institutions ensure that technology-driven learning does not widen the digital divide among employees with varying tech proficiencies? And I think that's a real challenge. From my experience in Pakistan, what I fear most is that there is going to be a lot of people. There are going to be a lot of people who would be like very weak in using tech enabled tools, and there would be a very few people who would be very proficient in using. So this digital divide, do you think this is going to be a big problem, or we can address this by maybe reskilling our employees or upskilling them? What's the view of the panel on this?
Maybe if I can go first. Sorry.
Yeah, go ahead, Juan.
Okay, just very quickly on this. I think for me, it goes back to the point that Rizwan was making, and I also made about be absolutely aware of the staff profiles and the staff roles, that not and the personalization element. So that's one dimension of this. This is really important, just to understand, what is the distribution between generations within your job, within your staff. The second point is about, and this is really important, at least in our organization like the BIS, is onboarding. It requires a longer and patient onboarding of staff, and this is really important, especially when colleagues are not familiar with AI tools and technological tools in general. And going back to Hans' point, I think it's a very, very helpful twist, because I think the way to address, we've seen authorities addressing is the same way that Rizwan was talking in Bahrain. I think you need to have also senior leaders get familiar on AI and other technologies, because sometimes they are in the way because they don't understand the implications of the technology. So involving senior leaders in the whole, you can call it executive training if you want, executive development, but to involve them is crucial in order to advance the whole organization in this journey. But let me stop there to give time to others to come in.
Great. So we are nearing the close time. So I would request each of the panel members. Yes, Dr. Rizwan Malik, you want to say something?
Very quickly, really. Maybe I can use the time, what we are going to allocate, maybe the last 30 seconds as a wrap up. I think, and what Carlos has just mentioned, I just allude to, add on to that. If you remember back in the days, going through everybody when they come out of their, they're newly hired, it's expected that they should know Microsoft Office from that perspective. I think from now on, and as we move forward, digital transformation and know-how around technology is something that is a must for each and every employee, no matter how technologically involved they are in the day-to-day activities from that perspective. So that is potentially a must for every employee. I don't think that's a threat, to be honest. I don't think that's that is something that is going to make pivot things around. But definitely, there's room for us to upskill our in-house teams to ensure that the technology that is out there, they can make the best use of it. So very basic examples, if you can automate your reply to your emails that are from a very general perspective, if you can delegate, usually managers or management in general would delegate that role to their PAs. Now, I think you can easily delegate that work to AI and the likes, where the responses can be automated sitting in your outbox for you to quickly just skim through them before they can press the send button. And by the time you send, each one of us spend probably an hour and a bit replying to our emails, right, every day. So if that can be automated, I think that's going to save a lot of time for individuals, and those individuals may not necessarily be involved in the technology from that perspective. So I think that's where a lot of delegation efficiency would come in, freeing up their time to do some other creative thinking type of role. So I think that's where the role of technology comes in. I think HRs have got a role to play in making sure that everybody goes through this tech-related courses on a regular basis. Organizations should be more involved in ensuring that they are into the awareness and advocacy programs of these initiatives. Last but not least, I'll also talk about Pakistan, for example, going through this transformation of the financial sector into Sharia compliant. I think it becomes even more important that the use of technology can be brought in, not only to innovate new products, but also enhance existing products and services. And I can certainly tell you, given that I've spent some time in this industry, Islamic finance I'm talking about, if the existing products and services can be enhanced significantly to align it better to the objectives of Islamic law by using technology. So there's a lot of room when it comes to Sharia audit. There's a lot of room when it comes to audit. There's a lot of room for when it comes to innovation and real-time transactions. So again, I think if we can understand that and make it relevant to our job profiles, the divide that you just kindly asked can be, if not removed completely, can also be mitigated from that perspective. So I'll take a pause here, but I thank you very much for giving me the opportunity.
Thank you, Dr. Malik. Dr. Ganbach, 30 seconds for you to wrap up.
30 seconds. Thank you. I put my professorial hat on and say AI and technology is a great opportunity and a challenge for us. It's an opportunity to use new methods for teaching, but it's also a challenge to engage with students who perhaps have more knowledge than us about how to use AI in their learning, and we have to incorporate that in the methods we use in our courses, and that's what we try to do day by day, and it changes the way we teach all the time.
Thank you, Dr. Ganbach. Thank you, Dr. Goswami. You are 30 seconds. You are mute.
Having switched to many of these in-person things, now the mute button becomes again more important. So I guess the use of AI in economic policy analysis for capacity building holds a huge promise. And it can enhance our capabilities and improve policy making. But again, we have to embrace this and be humble. We have to learn these technologies, sometimes from my own daughter, who is probably much better than I am at this. So we have to be open, but again, fostering collaboration with other institutions, be it academia, be it public sector, be it think tanks, be it private sector, is very important. We have to empower our teams so that they can navigate this in a much more effective way. So that's
thank you, Dr. Goswami. And finally, Mr. Juan Carlos, you are 30 seconds.
I can use 10 seconds. So AI is great. AI is really important, but don't forget human contact. Thank you very much.
Great. Thank you so much. And I would like to take this opportunity to thank all our panelists for their great knowledge sharing. I hope that the audience here have enjoyed your insights. I myself have learned a lot from what was discussed here. And please give a big round of applause to our panelists. Thank you so much. Thank you. You have a great day.
Thank you.
Thank you.
I think the panel has left. That's
Thank you
fine.
very much. Take care.
Thank you very much. Now it is time for our final session of the day. It's my honor to introduce CEO NIBAF, Mr. Riaz Nazar Ali Chinara. He will sum up the key takeaways from today's discussions and provide us with a roadmap of how we can adapt our learnings to future capacity building.
Yeah. I hope you had a very useful session since morning. A lot of panelists